I'm Chimama Mangazi with Business Time on Times. It is a magazine program where we bring you business and economic news stories making headlines. In the program today, economic experts describe the first half of the year as tough. Also in the program, Malawi Stock Exchange listed companies show resilience to economic shocks as majority project over 20% profit for the half-year period. We have these and other stories. Stay tuned. Hello and welcome. Economic think tank the Economics Association of Malawi has described the first half of the year as tough due to multiple exogenous shocks which the country experienced. Among other things, they cite high inflation, rising public debt, and intermittent power supply, which negatively weighed on economic activity. Frank Chikuta is Executive Director of the Economics Association of Malawi and explains.
We have had quite a turbulent first half of 2022 in as far as economic performance is concerned. The country was beset by a number of exogenous shocks, starting with the adverse weather conditions at the start of the 2021-2022 farming season. And then beyond that, we had the effects of the war in Ukraine, which has led to supply shortages of essential commodities and a rapid increase in inflation. So the first half was quite turbulent, to say the least, in terms of economic performance. Major challenge is inflation. As you would have noted, inflation has been on the rise. At the moment, it's at 19%, and the projections are that I think for 2022, it's going to be above the annual average is going to be above 17.2%. So our major challenge has been inflation, the continued rise in the cost of goods and services. And with increased inflation, the World Bank is projecting that with continued inflation at 15%, the poverty levels are going to increase by 4%. But if there is inflation above 20%, then we will have poverty increasing by 44%, which is quite a challenging situation for a poor country like Malawi. The energy situation has also been an issue of concern because for a country to produce energy is at the center of it all. So since January, I think since Cyclone Anna affected the power generation in the country has experienced intermittent power supply. In most cases, it is less than a supply of less than half a day, which is not adequate for production to take place. So the issue of energy has indeed been a challenge as well, on top of the main issue of inflation.
Secretary to the Treasury, McDonald Mafuta Mwale, considered that the first half of 2022 was tough for the business community as well as the consumer. He, however, was quick to mention that there are a number of short-term measures which the Treasury and the Reserve Bank of Malawi are undertaking to stabilize the foreign exchange market and the exchange rate. A majority of public listed companies are expected to make profit during the first half of the year. This has been revealed through trading statements from listed companies as a listing requirement on the Malawi Stock Exchange. More in this report by Justin Nkweo.
Trading statements that we have seen show that some listed companies' profits will increase by between 20% and 150%. For example, FDH Bank PLC profit after tax for the half year ending 30 June 2022 is expected to be higher than the one reported for previous corresponding period by more than 20%. Sunbird PLC, their half year ending 30 June 2022 profit is expected to be better than the previous corresponding period by more than 150%, while Omodzi Holdings PLC says profit after tax for the half year ending 30 June 2022 is expected to be higher than the previous corresponding period by more than 35%. NBM PLC says its profit after tax for the half year ending 30 June 2022 is expected to be at least 30% higher than what was reported for the half year ending 30 June 2021, while Standard Bank says its profit after tax for the first half of 2022 will be higher than the previous corresponding period by 25%, while on the other hand, Icon Properties PLC says 2022 half-year profit after tax is expected to be more than 20% higher than the corresponding period last year. However, it seems telecommunications companies' profits will be dwindled. For example, Airtel Malawi says its profit after tax for the half year ending June 2022 is expected to be approximately between 20% to 25% less than the profit reported in the previous corresponding period. And also, TNM PLC says its profit for the half year ending 30 June 2022 is expected to be 130% lower than the previous corresponding period. TNM PLC board chairperson Ted Piri explains some of the problems that they have faced for the expected profit to be dwindled.
We surely have had some problems. I think COVID did affect us in a way, but again, the price of fuel last year was a big issue, and then we've seen some other changes this year as well that has affected the business. But we remain confident that going forward, I think things are going to be different, and that the shareholders will be rewarded accordingly. Certainly, that's our inspiration for us to make a good return for the shareholders. I don't want to say what, but whatever it is, they will have to be better than what we've done at the moment. And so we are working very hard to have better operational efficiencies of the business, to increase the revenues, and also mitigate some of the risks that we experienced in the year that has just ended. Worried not, concerned, yes, we are extremely concerned. Like any other shareholder, their primary motivation for investing is to make a return. So if the share prices start going down, there is a reason. But I think they can only derive further confidence with the fact that I think we have put in place a program and initiatives that will see us come out of this situation. Not easy, they might be painful here and there, but I think that's the way that we're going to go. The key investment for this business is that we will be closer to our customers. I mean, TNM, whichever way you look at it, it's the Malawian company, and I think we want to ride on that. This business was the first to start, and I think it resonates very well with Malawians. And so we owe our shareholders, we owe the nation a better service, and so that's what we're going to poise ourselves. In terms of technology, we certainly want to be on as a leader in the terms of technology, but more important in terms of customer service, people should be able to see, and people have got to be proud of TNM. This is really the Malawian business.
Meanwhile, one of the shareholders in TNM PLC, Frank Halawa, says the expected dwindling profit after tax has the ability to affect share price on the Malawi Stock Exchange.
With such a statement, the price on the stock market definitely will be affected, because people, they will know now that 1 year, 2 years, the possibilities are very null that there will be any dividend payment. Therefore, people may begin to dump their shares on the stock market, which is very unhealthy. Already the share price a few years ago, it was at 29, which are 50, and now it's trading at 14. So if it continues going down, these are people's money. People, they trusted this company. People, they invested their money in this company. And believe you me, it doesn't really make sense that another company in the same environment it has got no Airtel money, they are making better profits. TNM, the data is there, the Mpamba is there, the towers are there, and we're posting these small profits. And even like a trading statement, it's a scaly atmosphere, and unless something is done that is scaly.
In an interview, MSC Chief Operating Officer Kelin Kanyangala said trading statements are an indication of good performance of the listed companies in regard to half-year results. Chief Executive Officer of Stockbrokers Malawi Limited, Noel Kazakumanja, concurred with Kanyangala, saying the performance will excite trading of shares on the market. In recent months, performance of the market has shown continued recovery from the slowdown brought about by the COVID pandemic, witnessed by an increase in the Malawi All-Share Index.
This is Business Time on Times. We'll be right back after this. Welcome back. Government has injected 100 million kwacha into the Workers' Compensation Fund as seed money for its operationalization. The fund was established by the government in a bid to bring sanity to the compensation of workers who have been injured in line of duty. Meanwhile, Employers Conservative Association of Malawi say the fund will help employers avoid dubious compensation claims. ECAM President Annie Chavula explains more in this interview.
When we talk about the Workers' Compensation Fund, we're talking about a fund that has been put in place which will look into issues of claims by employees in the event of injuries or diseases which are acquired through their work. Currently, what happens is when an employee is injured, they claim to the Ministry of Labour. After claiming from the Ministry of Labour, then they are given a percentage of impairment, which they claim from the employer. Currently, what is happening is that we have a lot of fraudulent claims. So there are employees who are conniving with lawyers and hospital officials, even Ministry of Labour officials, to get higher claims. So as a result, it's impacting on our businesses because, you know, when we make such huge claims, it affects the profitability of our organizations. As such, the sustainability of our it puts in jeopardy the sustainability of our businesses. Okay, what will happen now is all employees it's mandatory that they join the Workers' Compensation Fund, and when they are members, any claim that will be made by any employee will no longer be paid by the employer. Rather, it will be paid by the fund. So in that way, companies, businesses are cushioned against that risk.
Omodzi Holdings Limited, which owns BICC, Malawi Square, President's Hotel and Presidential Villas, says it has posted its first profit since inception in 2013. Omodzi Holdings Limited chairperson John Kamanga says the firm, which has been registering losses, recorded a profit of 413 million kwacha in the year ended March 31, 2022. Kamanga explains.
Thank you. Indeed, since inception of Omodzi Holdings Limited, that is 2013, the company has been making losses. When we came in September 2020, first actually we looked at in terms of the operational issues which are around, and one of the issues which we discovered is that we wanted to do cost containment. And this cost containment is put in place, all structures in place in terms of cost control, in terms of procurement, in terms of also human resource management as well as efficiency. Because we've discovered that there was also lots of wastage in terms of procurement, also improper procurement processes, so that there were no procedures put in place. So what we did is that we wanted actually to put procedures in place in terms of financial management, and that entailed procurement, also entailed cost management, such that within the cost management, we are ordered to follow the procurement processes. In that doing, it brought in lots of actually the cost in terms of procurement. On top of that, we also went ahead in terms of visibility. What we did is that at least our team, the marketing team, went out to all the customers, meeting them in terms of actually providing them the services which we offer. You know, as the UHL, we have 4 products offerings. One, we have the food and the beverage. We also have the rooms. We also have the conference and meetings, as well as the presidential villas. So in this aspect, our marketing team went out to the general public in terms of these services which we provide, such that they can actually they can access them. On top of that, also improving service delivery to the clients. We have seen that at least we have actually mouth-watering food, and there is a variety even at the breakfast. We have had very good compliments from our guests who are actually taking up in terms of the rooms on the breakfast. Even on the conference and meetings, we also have good compliments from our guests. So the improvement in service delivery combined with cost containment by putting proper procedures in the company, that actually resulted in registering profit. On top of that, it's very important to have the human aspect. So what happens is that we also increased the human morale in terms of our labor force. That what we're saying that during the COVID, we said we're not going to dismiss people, but what we want to do is that can you contain costs so that at least we maintain the officers, the employees which are there. And they understood the mandate, they understood the vision of the company, because our tagline is that this is the place where African leaders meet.
And Steve Luanda is the hotel's chief executive officer.
It was a bit challenging because we just came from COVID, and COVID had its own challenges. We had restrictions in terms of arrivals because our business mostly depends on tourist arrivals, and also because of the restrictions on COVID, meetings were a bit limited. However, as COVID was waning out, business started picking up, and business has been good towards the end of last financial year. Well, it's very, very important that our stakeholders should really know and have an exposure to our products. So this branch, in one way, is to expose them to our products. But on the other hand, it's also to put a human touch so that at least they know the people behind the business. They know how things are done here, so that at least they should also feel appreciated. And their aim was to make sure that they have that thing, that they are appreciated as stakeholders. We are unique. First of all, we're a 5-star place. We offer 5-star services. That's number one. Number two, you will not find anywhere in town facilities like ours. You can't compare them. We've got the best facilities, and we're maintaining the standards. Our standards are high. People have tried elsewhere, they will know. But all we need to do at this point in time is to make sure that with things like branch networking, people will now understand, they will have first-hand experience to the services we offer, and then they can make a comparison. And this is the reason why we're doing it.
Well, with that item, we've come to the end of today's edition of Business Time. It is a magazine program where we bring you major business and economic news stories making headlines in the country. On behalf of the entire production team, I'm Chimwemwe Mangazi. But always remember, if it doesn't make money, it doesn't make sense. Bye for now.